With crypto becoming an increasingly important part of institutional portfolios, I am joined today with Dovile and Andy to discuss crypto indexing. Andy, what is the CoinDesk 20 Index and why was it created?
We built CoinDesk 20 with a pretty ambitious objective to have CoinDesk 20 be the most traded, the most benchmarked, and the most referenced index for the digital asset class. Ease of implementation at scale was critical, so the index was built with liquidity in mind. So CoinDesk 20 was introduced to the market first as the settlement index for a perpetual futures contract, a crypto native future, and one of crypto's first index futures. That caught the institutional world by storm, and that derivative has now traded over $15 billion of volume since its launch. So institutions were clearly ready for a broad-based index to enter into the space. We had to remember that crypto is as much a trading asset class as it is an investment asset class. The entire asset class can turn over in a single month's trading. So having liquidity and familiarity with the institutional trading world, be familiar with CoinDesk 20 was critically important. Since then, as the crypto asset class has attracted more investors, CoinDesk 20 proves to be a great broad-based benchmark for the digital asset class.
And how do you see this benchmark index continuing to facilitate and shape the way that institutions and retail investors adopt the digital asset and crypto asset class?
Well, investors need a benchmark. Institutional investors need a benchmark to show what their allocation is doing. Retail and professional investors also just need something to help them avoid making specific selections around names and specific selections around timing. You kind of want to just own the market portfolio. So CoinDesk 20 captures over 80% of all of crypto and has diversification built into the methodology. So users can allocate to the index like they would allocate to a broad-based index in another asset class and expect to get all the top 20 stories in crypto.
Dovile, why did WisdomTree choose CoinDesk as an index partner?
We chose CoinDesk as an index partner because they have over a decade of experience in building and managing indices. They are also building indices that are possible to implement because it's very easy to create a theoretical index that it would be impossible to replicate in a physically backed crypto basket exchange traded product. And also what we like is CoinDesk talk about CoinDesk 20 index performance everywhere. So for investors and even people who have not invested yet, it's very easy to see how the broad crypto market is performing. And this is really good for them to get comfortable with the idea of putting their money into it.
Andy, it has been an incredible launch of the CoinDesk 20 and the impact on the market for the overall maturation of the asset class has been palpable. How do you see this continuing to evolve going forward?
The trading environment around crypto continues to integrate with traditional trading systems. Bitcoin had a big head start with investors, though, with Bitcoin ETFs in the United States meeting unprecedented demand. Now it's time for the other assets to catch up. Narratives around stablecoins, US legislation, regulatory progress, ideas like tokenization are top of fold news in a way that's good and encourages people to get involved. We see more and more adoption, name by name, through the broad-based asset class, beginning to attract investors' attention, tempting them sometimes to want to pick names, chase fast money, or time the market. But eventually, people will have to allocate to the asset class for their long-term allocations so that their expectations and that their performance can match how the asset class does altogether. So CoinDesk 20 does that famously well, proven in the institutional trading markets and now proving itself in the institutional investment markets. So we feel that this will continue to expand, and looking forward, the broader you get, the more stories you get in your portfolio.
Dovile, why use WisdomTree for crypto exchange traded products?
Great question. And the answer is because we have over 5-year track record in managing crypto exchange traded products. We launched the first one back in 2019, before most people even considered crypto investment. And since then, we have been dedicated to writing research, doing analysis on various crypto exposures, educating our clients about the value of having some crypto within their multi-asset portfolios, and showing how the market is evolving and what is happening within it. And in addition to our research expertise, We also have very strong operational setup for all of our products. They're physically backed. Assets are held securely by our custodians in segregated cold wallets, and assets are also insured. And they are held for the benefit of fund investors. And fund investors have a broad choice. So we have from single trackers, so single token exposures, to broad crypto baskets. For example, one that is tracking the CoinDesk 20 index. And for most investors, the entry into the crypto space is by going with Bitcoin. But once they are in Bitcoin, they are looking for what else is out there. And most of them do not have the expertise to determine which individual altcoin may be the most successful over the coming year. So complementing Bitcoin exposure with a broad crypto basket, such as CoinDesk 20, gives them exposure to the overall crypto economy and gives exposure to blockchains that are going to grow over time. Because now there is a lot of activity happening on various blockchains. For example, tokenization, stablecoins, and the blockchains that gain the massive market share within those activities, they'll be the ones to grow the most. And they are the ones that investors should want within their portfolios. So by having a broad index and having a physical exchange-traded product, tracking that index and providing investors an exposure to over 80% of digital asset market cap, and also providing exposure in a way that is physically backed and some of the tokens are staked, is for great benefit to investors.
Thank you, Davila. Thank you, Andy, for your insights today.